Hello and welcome back to Coinscrum's Meet the Founders series. I'm delighted to be joined today by Bhairav Patel, co-founder and CTO at Defactor. How are you doing, Bhairav?
Doing very well. It's a nice and sunny day here.
It's beautiful, isn't it? Let's take advantage of it. But thanks for taking the time to join us. I'm really keen to hear more about what you guys are building at Defactor. I guess the one-liner is that you're building the bridge between traditional and decentralized finance. And obviously, decentralized finance has certainly been all the rage over the last 18 months or so. But still early days, and I think the approach that you're taking to bridge that gap is going to be critical. So keen to hear more. Before we dive in, just we'd like to find out a little bit more about our founders' background, what inspired them to kind of start working on the project that they're working on. What were you doing before you fell down the crypto rabbit hole?
Well, firstly, let me say thanks for having us on and allowing us to speak to the Coinscrum audience. Is great to be on here, and like I said, I've seen some of the previous videos, and it's good to be part of such an illustrious crew, illustrious set of founders. So my journey, into crypto began really with back in the 2012-13 when I was living in Ireland, and we had a talk from the founder of Circle, actually talking initially about crypto. But I guess my background really is I started off consulting at PwC, IBM, and then from there I became CTO for a number of businesses across the world. But the main one that to focus on is really a company that was based in Dublin back in 2013. We raised about 12 million, and that was all in the supply chain finance piece. So over about 4 years, we raised 40 million, expanded that out across the globe, and became a Forbes FinTech 50 business. And during that time, back in 2016-17, I was really quite interested in finding out how can we use blockchain in order to help smooth out that trade finance, supply chain finance process. So I think back in 2016, an Australian bank did their first letter of credit financing, and then obviously Ripple was taking off and starting out. And what I really wanted to do back then was figure out, okay, we've got lots of SMEs around the world who need finance. How can we use blockchain technology to get money to them quicker and actually make decisions quicker? Now, obviously the industry was in its nascent form back then. There wasn't really the infrastructure piping around that. And obviously we kept an eye on it. And when I met the co-founders of Defactor, we had a great opportunity to really take a lot of the lessons that I learned and they've been learning on their DeFi experience, and I learned in my kind of traditional finance experience, and bring that together into what we're calling Defactor now. So it's a journey that, we've been doing this for the past year or more than 18 months now, but it's really kind of the thing that's been sitting in our back of our heads for about 5-6 years now.
Yeah. I think often said that the ideas are the easy part, and then quite often, obviously, the execution is critical. But especially with new technologies, sometimes the broader infrastructure isn't there, and you need that to catch up for you to be able to have the right tool set to build upon. And I think we've seen that now. I guess obviously with Ethereum, that's kind of opened up so many opportunities, and many other smart contracting networks out there as well. So should we dive in? So it's clear to see, obviously, from your background and your experience, why you kind of decided to focus on this particular vertical. Makes a lot of sense. Things like user experience and access is going to be critical. Still lots of room for improvement, I guess, from the early DeFi platforms that are being developed. Do you want to kind of just dive in a bit more and go a bit deeper into maybe the high-level technical architecture or overall architecture of what you're building, and from the perspective of the different types of users and profile of users that you expect to be using the platform, what benefits this will bring to them?
Sure. So I'll give a little bit of background story, because obviously there's a couple of other people involved in it as well. So there's the co-founders we've got as Ernesto Villa and Alejandro Gutierrez, who will probably hate me for mangling their Spanish names, but anyway. So over the last, say 12, 18 months, they've been going on a DeFi journey in order to get DeFi funding for their company called Console Freight, which funds freight forwarders that are working within their network. So people shipping goods from, let's say, China to the US. And we've been working with them, I've been working with them, to build that technology layer to get them access to that DeFi liquidity. And what we realized is that if you want to scale as a real world asset originator and actually get access to the DeFi liquidity, it's very difficult. You have to have your own infrastructure, accounting, reporting, all of that is non-existent, right? Even doing the on and off ramp fiat is trickier and can be quite costly. So we got together and said, okay, what we've built now here is a good backbone. Let's take what we've got make that into a more generic platform that others can access. And so really what we've put together is a platform that allows asset originators from around the world with different asset classes to actually access DeFi liquidity. And so the different components are obviously starting off at the beginning. Really, you've got the KYC AML piece. Now my background from the previous fintech I talked about, we were very heavy on KYC AML. We had one situation where this guy was selling 400,000 euros worth of tomatoes to his cousin, right, and looking for financing. And so, you need to make sure that the trades that you're doing are legitimate, and obviously you need to make sure there's no dark money moving around. So there's obviously the validation piece of validating the asset originators on the platform. Then when we're looking at credit risk is obviously a key factor, and that not just in DeFi, but generally investors need to know that there's been some risk assessment done. So we have that piece within the platform to understand the risks. So you're looking at things like, trade history. So for invoice finance, you'd be looking at things like trade history, dilution rates, default rates on payments, etc. Similar for different asset classes as well. And so we'll have that risk element built in, and then we're tokenizing the assets to ensure that so if, for example, that you'll have the NFT which represents the invoice, and so that is a legal representation of that invoice. So we're working with the lawyers to ensure that is the information contained is enough to show that the legal ownership is conveyed when you fund that NFT, so that if something does go wrong, you can go and press your rights against that NFT. So we've got that piece. And then when you're looking at the liquidity pools themselves, they all have their own covenants, right? So they'll all state, for example, for trade finance, an easy example is that they'll have various constraints in that you shouldn't have an invoice over has a certain value, which is over a certain percentage of the overall pool. So for example, if you had £100,000 pool, you don't want an invoice at $60,000, right? That's £60,000, because that defaults, breaks the whole pool. So there's lots of covenants like that. So concentration limits on suppliers and debtors and things like that again, we'll be ensuring within the platform to make sure that investors their constraints are met. And then on top of that, you've got some of the visibility aspects. So one of the key areas that we've seen in DeFi, I don't know if you've noticed this, is there's a lack of transparency, which is kind of a bit weird when you're thinking blockchain technology, but there is a lack of transparency in what you're actually investing in, where the things that you're investing in, where they come from and where they go to, right? Mm-hmm. And so what we really want to do is build that visibility on top of the NFTs, the assets that are being funded through the platform. So that's kind of the core backbone. And what we're layering on top of that are obviously different types of assets. So we're starting off with invoices and trade finance. We're moving into things like loans and looking to move into real estate. So as we progress and as we add in more asset classes, we'll layer on more features onto the platform. And then, of course, importantly is the on and off ramp. So we're working with a number of providers at the moment to make sure that whole conversion from stablecoin to fiat is a simple and easy and costly process.
So the idea is you are this sort of facilitation layer but an open access platform with certain conditions that need to be met for someone to effectively integrate with the Defactor protocol as such. But the idea is that anyone can come in, and as long as they meet those conditions, they can join the network and plug in their existing platforms. And we'll perhaps a little bit later come on and talk about some of those initial partnerships that you're forming. I think an interesting one, because we're actually covering this on our podcast this week for the Coinscrum Markets podcast. You mentioned using NFTs as effective legal contracts in their own right. And we're speaking with guys from Linklaters law firm in the UK and a representative from the Law Commission in the UK, looking at smart contracts under English law. And whether they can operate under existing laws, or whether there's going to be needed to be amendments to the law at some point. How have you found that? Because it's always difficult for the pioneers to come in and approach these very difficult nuances. First up, and we know that over time the incentives are there to move on. How have you found that particular part of the conversation?
So what's interesting here is that we're through the partnership with Console Freight, we're already funding invoices, and so there's SPVs that are already owning the assets, right? And so the initial approach is quite a traditional approach to it all, where the invoice represents the asset, and the asset is then going to be pushed forward in the true sale. It does get more complicated as you're looking at things like loans and real estates, and even fractions of loans, and that becomes quite quite interesting. So we are working with the lawyers on that. So essentially what we're doing is taking the easy path at the moment, and then working with the lawyers to get opinions to ensure that we can enforce the rights against those assets in different jurisdictions, because then that gets quite complicated in itself as well, right? So yes, there's a lot of work to be done, and a lot of legal opinions to be got. But the lawyers that we work with, we're confident that there's a path through, because ultimately we want to make sure you can protect the investors, right?
Yeah,
Is one of the key
absolutely. So let's just touch on the technology that you're building on. What network have you selected to develop it upon? Why you've made that decision? What you're thinking about interoperability going forward? Obviously, not necessarily committing all of your eggs to one particular basket when people are deciding what the best networks for a lot of these systems are going to be going forward.
So there's a couple of aspects to this, right? So we're working with Centrifuge as one of the partners that we've got very closely for access to liquidity, right? So they're providing the pools that we'll use to fund the assets. And so obviously we're building on Centrifuge chain there. As they migrate Tinnock over to Polkadot, we'll be migrating across to that. Initially for us, we're using Ethereum as the chain to mint the NFTs, but we're also looking at other chains for future-proofing ourselves to ensure that the speed of minting NFTs, costs, etc. So there's some R&D going on in the background. But the way that we look at it is that, we know that we're going to have to bridge across to Binance Smart Chain, Polkadot, wherever the liquidity pools pop up, really, and wherever the demand is from an investor perspective for real-world assets. So we're open, right? We know that we're gonna, if we want to be a true pipeline and a true access to liquidity, we have to cross bridges.
No, absolutely. That will make sense. And maybe we can just go on and then talk a little bit about, you do have a token built in to the platform, the Defactor token. Can you just tell us a little bit more about that, what it's there to do within the whole kind of ecosystem?
Cool. So the primary purpose of the token is for asset originators to get access to the funding on the platform. Now, of course, one of our missions is to make it easier for them to gain that access. So they'll be either able to pay their fees in Factor token, or will convert stablecoin that they receive as part of their funding into Factor. And so those fees are obviously going to be as part of the transaction fees for the platform. There'll obviously be staking rewards for Factor holders. We'll be using in some aspects, will be for collateral. We're actually using stablecoin in order for us to ensure that investors can get stablecoin back. But we're also looking at other ways that we can make the token more valuable for investors in that respect. However, that you've also got the governance aspect of it all, right? So you've got governance that will be we want to get the community more involved. We want to then be able to make decisions on things like asset originators that we bring on board, or sectors or countries that we go into. So there'll be that usual governance around it, but primarily the Factor token is going to be used to generate the funds, the fees from the transactions that go through the platform. Okay,
and then going a step further, I guess from that, when you've got originators of assets on the platform, and then you've got obviously investors on the other side. We talk a little bit about the protections for the investors and how collateral is managed, how that's posted, how it's topped up if needed, and how investors are going to be protected.
So it's going to differ a little bit per asset class, and in a sense by the type of asset originator that we're bringing onto the platform. So obviously, as I mentioned, there's a KYC AML is a great importance. The history of what I've done previously is testament to that. But we're also looking at, so you've got a set of asset originators. So some of the partners that we've got at the moment have within their own frameworks, their own underlying protections. So there'll be credit insurance, for example, with invoice finance that will kick in once, if there are delays in payment or if there's defaults in payment. We also be working with debt recovery businesses. So we're signing up with debt recovery businesses to ensure that debt can be recovered as fully as possible. So it's kind of a two-pronged approach, right? So we've got one aspect where if it's a large-scale asset originator that's already financing businesses, we'll be working with them and piggybacking off their mechanisms, whether that's insurance, whether that's guarantees that they got against loans, or guarantees that they've got against properties. That will be there. In trade finance, say for example with Console Freight, they're actually taking physical ownership of the goods that are being transported. So again, if there is an issue, then they'll be able to liquidate those goods, and they work directly with people on the ground that can actually sell those goods quickly in order to release funds. So there's that aspect. There'll be the risk elements within the platform itself that we're, as I mentioned, so we'll be performing risk analysis on the assets that are going through the platform to ensure that they are weighted for yield, but also for the amount of money that's being given. So again, invoice financing is a very easy example. You know, if we feel that it's maybe a higher risk, we may reduce the advance rate that's given to the company so that they don't get the full face value of the invoice up front. And then of course you've got what we're doing around the liquidity pools to ensure that we don't breach any covenants around that, and that we can ensure that those pools are kept stable and don't incur or don't start funding assets that could skew the yields or the default.
Okay. So maybe going beyond that then, can you talk about where you are at, because you mentioned some partnerships, and I know researching for this conversation, you mentioned some partnerships, there's others that I noticed as well when reading through your documentation. Where are you at in terms of your build out these partnerships, and maybe if you talk about some of these partnerships, it might help visualize for our viewers, you know, the whole entire user journey as an example.
Sure. Okay. So as I mentioned, that we've got Console Freight as the first partner to come onto the platform, and they're currently working with Centrifuge. And so Centrifuge is one of the big partners that we have within the platform in order to provide liquidity to the asset originators, right? So we're working quite closely with them on their tech roadmap as well to ensure that we are following as they change and improve their platform. We're able to take advantage of that and actually smooth out, reduce costs there. So Centrifuge is pretty much one of the biggest partnerships we've got at the moment, but that's not to say that we're fully tied into them. We do want other liquidity pools to be part of the network as we grow. Console Freight is again, as I mentioned, has already been funding. They've done $5 million already of financing through the Centrifuge pools, and they're looking to scale up, and that's mainly in trade finance and invoice finance, and that is an exciting partnership because it's already working. We have another partner called Accelerated Payments that is looking to increase the size of their book. I think they're about 35 million euros at the moment when it comes to their investment book, and they're looking to double that to 70 million this year. And they are expanding currently in the US and looking to do more US dollar denominated funding. So Defactor is a great line for them. So we obviously providing USD stablecoin. It's an easy way for them to access liquidity there. You've got companies like iHuddle that is a platform that is essentially a secondary market for asset managers. So again, they bring deals to the table, and what they're looking to do is essentially take a slice of each of those deals and say, okay, we're going to get, let's say, 80% of that funding from the traditional asset management, other asset managers, hedge funds, but 20% will be open to DeFi, and that can be things like loans. It could be some equity deals. It could be property. And so these are things that we're exploring, as I mentioned, with the lawyers going forwards for the different types of deals. And then there's Lendwise, who are a company that provides peer-to-peer lending loans, student loans for postgraduate degrees. So so imagine if you're doing a master's or a PhD, and it's quite an expensive thing to do, right? And they provide loans to students who necessarily can't afford to do these things. And so they're a regulated entity, and again, obviously have their own checks and balances, and they're looking to expand out. So, you know, from very early on, we've got those partners that we can bring on board. We're obviously starting with Console Freight and Accelerated Payments, and so towards the end of the year, though, so we're looking at aiming for Accelerated Payments to come on at the beginning of next year, end of this year, and then additional asset classes to come on during the course of next year. So from a very basic level, we've got the bare backbones of that funding piece in place. What we're looking to do is now take that and make it more generic, you know, give it the de facto look and feel. And importantly, what I really want to do is make sure that we do is bring the community and get them more involved early on. So helping us shape even things like the look and feel of the platform. You know, simple things like translations of the websites and of the platforms, and try and get that community more engaged, looking at the asset originators, having a platform for them, not only the asset originators to talk to the investors, but for the investors to be able to question them and ask them more about their, you know, how they do their own internal processes and what they fund and how they fund them.
And where do you sit in terms of the you know, open source versus proprietary technology? Where do you expect people to be able to come in and literally, you know, build components on top of kind of your foundation?
Yeah, so this is an interesting question, and one that we've been going through recently. So what we want to do is try and open up as much of the data as possible that we've got, obviously keeping in mind privacy concerns and obviously commercial information. So if you think of what we have at the very base level, it'll be KYC information, it'll be asset registers and funding information. So those are initially where we're thinking of opening up and allowing people to kind of look in and see. And I know that, that one of the key things there is ensuring that you don't have double financing of assets, right? Or there is a traceability of things there. So that's one of the key things that we'd like to open up. And really it's the world is our oyster. I think that's the thing. So one of these things is that, we may have a vision. Once it gets out there, other people have new ideas, and that's what we're really looking for is just more collaboration. And the great thing about blockchain space and DeFi space is everyone's very collaborative, right? Yeah. People share ideas, and I think that's the key. Is just start talking to people. Have a few beers.
Okay. Well, we'll give you details at the end of the interview, so people know where they can, who to approach and where. So you mentioned, obviously, given an insight in terms of where you're at in terms of build out partnerships and kind of initial traction. Where are you at in terms of funding, financing, and what's the critical things beyond other things that you might not have mentioned already over the next year or so that you really need to be focusing on to expand?
Yeah, so at the moment we've gone through our seed stage with that's all closed. We're at 1.6 million there. We'll be looking to do a public sale around the end of August, beginning of September, because of the way the markets are at. That seems the most sensible time at the moment. And so, so that's really where the funding piece is at. From roadmap perspective, there's a lot to do, really. As I mentioned, the staking will be in place from day one. We want to build out more. We'll need to build out more of obviously the governance over the next year and a half. And I think the focus for us is really going to be on adding that variety of asset classes. And what's been really interesting actually is that as we pushed out, there's a number of other, I wouldn't say necessarily finance providers, but tokenized blockchain DeFi businesses that are looking to work with us to access the liquidity. So rather than, not just real world businesses, but real world businesses that are already going to other blockchain businesses to tokenize their assets and then coming to us for funding. So I think there's a lot there, right? And I think there's a lot to explore over that. And, I don't know, you know how it is, right? When you start a business, you have a vision for the first 6 months, and then the market tells you, wow, we need all these other things as well, right?
Yeah, you need to maintain some level of flexibility.
Sure.
And, especially in these young markets as well, you really do need to be able to kind of move as things change around you.
Yeah.
And I guess you've been on, you mentioned you've been looking at this for some time, and you mentioned Ripple, I think, where like that did look like a potential solution for certain use cases, and then maybe it didn't have enough baked into it to be able to achieve what lots of people were trying to. Now I'm seeing things evolve as they have. What are the things that just broadly in the kind of DeFi space, blockchain space, are kind of catching your eye, exciting you? Think that you're really keen to see how they develop because they could help you enhance what you're developing at Defactor and just maybe the space in general. What's catching your eye there?
Well, what's exciting is that there's so many companies moving in to look at this space and try and provide real world solutions. So there's a parametric insurance providers coming in to the market, so you can get just-in-time insurance, which is very, very interesting. You've got a number of companies that are looking at help ensuring that individuals own their own data. So I think the ecosystem looks like it's growing. You can see that there are more and more companies popping up trying to fix a small aspect of the overall problem. So I think I came across another company just recently that's looking at even personal credit risk, right? So and building up your own credit scores using blockchain technology to do that. So there's that obviously in the consumer world, but that will obviously translate over time into the business world. And I think there's people coming up with very innovative niche blocks that can then all be lumped into, joined into Defactor to create a much more comprehensive service. So I think that to me is quite exciting.
Yeah, I think in that sense, if you've been around for a while, or anyone that's been around for a while, I think the mindset's changed a little bit from kind of the purist attitude that blockchain should be, free from any sort of intervention from state actors or regulators to kind of, a bit more of a pragmatic approach that, look, if this is going to scale and be useful, then, there's certain boxes that are going to need to be ticked. And I think a lot of people now are developing with that in mind. But at the same time, you know, we're sort of seeing regulators stand up because of the size of the market and, you know, put pressure on in some ways. And, you know, banking, you know, people still banking relationships are very tenuous in many ways. What do you think are the biggest risks that people need to consider? What's kind of worries you that might become a spanner in the works for what you're trying to do?
See, regulation is an interesting one because I actually see that it can be a good thing, right? If it's done in the right way, if it's not overburdensome and it's not something that is really trying to constrain the market, then actually regulation can bring transparency and certainty to the market, right? People can know, they can know that they can go to a place and this is, you know, they know what they're going to get. I guess it's the risks with any kind of small emerging sector. You know, you're going to have, I mean, there'll be lots of companies popping up, going away, right? So you need to understand who's the team behind who are the teams behind the project. Do they have the funding? Do they have longevity? Do they have the experience to execute? So there's that kind of element to it all. Regulatory, like I said, I think in many ways for us would be a good thing in order that it can bring that clarity to the market, because uncertainty is what everyone hates, right? Any business hates uncertainty, and any business in the real world looking for finance and DeFi will want that kind of ability to know that, yes, this is a steady pool that I'll be able to tap into for X number of years in order to grow my business. And so that's always a good thing. And it's good for investors as well, which is again what we're trying to do with the transparency piece for investors. But, you know, security, I mean, I've worked in tech for so many years, and security every year is just a bigger and bigger issue, right? And you see so many breaches going on now, and you know, we're working with some, you know, great security experts, but I think if the community itself can get together in a coherent way to tackle it, that would be amazing, right? Because I think security is always going to, especially when the sums of money we're looking at now.
Yeah, exactly. Yeah, open networks, you know, sometimes complex smart contracts, and unfortunately, you know, there's always going to be errors, intentional or not. But I guess, you know, it's interesting how we've seen that, and having it all open. I guess it's changed from the user's perspective. At least they've learned to maybe accept and analyze their own risk when maybe they've been overly reliant on regulators to come and bail them out. And maybe that's kind of a good thing overall. Obviously, we don't want to see people have losses, but also, you know, like viruses anywhere. I mean, probably not the best time to be talking about that, but you know, they do help strengthen security in this world as well, where flaws are spotted and identified.
It brings people's attention to it, right? And I think a lot of times you see even in software development, right, where security is the last thing people think about. Actually, it should be the first thing you think about, and privacy as well, right? Those are the things that you need to think about first off. And I think it's unfortunate it's happening, but it does mean that there is more money being put behind it and more attention being paid to the problem.
Yeah, no, excellent. Bhairav, it's been fascinating to hear about what you guys are developing. I think you're in a kind of a really good spot where you can actually see solving real world problems and seeing real world demand for it as well, and definitely seem to be taking the right approach. If people want to find out more, I know we've got the information up there behind you on the screen.
Up there.
So Defactor.com, I guess to go, and they can find you on LinkedIn as well.
So I'm Bhairav Patel on LinkedIn. You can find us at Defactor.com, Defactor_ on Twitter, and we're on Telegram as well.
Excellent. Brilliant. Okay, well, hopefully people will reach out to you. Thanks for joining us, and wishing you best of luck in the fundraising later in the summer, and you know, your future developments and rollouts. Thanks for joining us.
Thanks for having me, Paul.